Good day, everybody. Brian here from QuantLabs.net. Just wanted to introduce everybody that might be new to this. I am Brian from QuantLabsNet.com. We have moved to a new domain, QuantLabsNet.com. Two things I just want to introduce you to quickly is if you want to know more about TradingView, why I use it, sign up and get yourself a 45-minute video to explain why I think TradingView is the absolute number one platform on the planet to trade and fully develop an algorithmic build automated trading. Quite quickly, you don't need to be a sophisticated coder. On top of that, I've got a group now also that can be found on quantlabsnet.com under more groups. Click this one, quantlabsnet.com public forum, and you'll see all the information in there about my news and when I'm reporting pretty well as close as I can get every day. Anyways, let's get into the big mainstream article you're probably here for. Let's check it out. Okay, how to get a job in a hedge fund. Now, before I put out a podcast on quants, similar. This is now going to be the style of trading, the strategy that you can use for hedge funds. Again, big thanks to the same source that gave me this one, along with this hedge fund one as well. So, Unraveling the World of Quants, Rules, Skills, and Opportunities is the um, podcast video you want to get over at YouTube Quant Labs, youtube.com/Quant Labs. You want to listen to that one as well. It's about an hour long and free. Okay, so here we go. How to get a job in a hedge fund. All right, what do hedge funds do? Clients, blah, blah, blah. I'm not going to read that. You probably know what's involved there. What are the different types of hedge funds? So this is the important stuff we want to know about when it comes to trading and the styles of trading and the different strategies that you can get. And you could probably easily build on TradingView using AI if you know how to use it properly. That's what I do or will be doing as well. Well, all the hedge funds are chasing imbalances. The imbalances you will find depend on kind of strategy the hedge fund you work with is pursuing. Here's some of them: long, short. Hedge fund managers do go long some of the time. They also go short some of the time. They go long when they expect the price of a product to rise, and they short when they expect the price of a product to fall. No guff. All right. So for me, what I do is long only. Most people, unless you're a real insider or really intelligent, whatnot, may start also doing short. So if you start to see the markets tank, you can, be it in futures, options, or even shorting, if you can get hold of borrowing shorts from somebody, yeah, you can short the markets as well and do quite nice. We may enter that environment in the next couple of months. We don't know. And there may be big, big predictable crashes. I can tell you about Canada, we do expect to see something happen to the Canadian dollar. Of course, I'm not dropping any hints here, just saying, right? Okay, next we have global macro. Macro funds invest to benefit from global macroeconomic trends, both long and short. Lancaster says global macro hedge fund managers look for imbalances between countries and things like economic growth, interest rates, and central banks' reactions. So when I bring up Canada right now, and today is June 21st, we are starting to see cracks in the real estate market, namely where I live, and we'll be soon saying bye bye to Canada and moving elsewhere like the rest are. And you could predict and maybe do a predictable, nice, big short on the Canadian dollar and anything Canadian. And that's an example of macroeconomic. They profit from the moves in the country's interest rates. This is now what we're calling differential interest rates between, let's say, the Canadian and the US. So if I have a portfolio all in Canadian dollar, I move it and hedge it into the US dollar to protect the uh, the wealth potential and to retain the wealth that's been built up in that portfolio. So I move out of uh, Canadian dollar held assets and move them into US dollar because it's more stable at this time. And it seems to look to stay stable and strong in the months to come. And if, let's say, we have the flip side where the Canadian dollar starts to move up and the US dollar starts to decline, we flip it back to hold more Canadian dollar at that point if need be. And it shows that. So they profit from moves in the country's interest rates or from moves in the foreign exchange, equity, and credit markets. I've given you a very clear example of that between the Canadian and US dollar with both economies. Rather, they profit from the reaction of these moves that they make. Arbitrage. Everybody talks about arbitrage. Focused hedge funds seek to make the most of price differential between security products. So again, US dollar, Canadian could be very predictable. But the simplest, the statistical arbitrage, stat arb, funds put stocks into related pairs. Again, this could be a simple Forex cross pair. US dollar, Canadian dollar, US dollar. It could be USD, Swiss franc, and the euro, and so on. If one pair does well and outperforms the other, another good example I should always say is the US dollar and Japanese yen. You look at that and you look at that carry forward interest that you can make over that for the last, I don't know, few decades. It's predictable returns. I'm not saying to drop hints here, of course. If one pair does well and outperforms the other, it will be sold short in the expectation that that price will then fall again. It's all about predictability. The underperforming stock will be bought in the expectation that its price will rise to meet its pair. Arbitrage funds are often quantitative. We know about that. They use complicated computer programs to determine what they buy and sell. And you too can generate all of these on your own using something like TradingView. Go watch that video and go to the links I've already provided. Now, these are different types. So these are event driven. Hedge funds try to profit from one off event, and you can put predictable moves, bet big, and hope to make big on that prediction. For example, one company decides to buy another, it will usually pay more than the current price for the shares in event driven funds will seek to benefit that. That can be led by insider trading, systematic and quantitative. That's again another area that the programmatic, uh, all that can drive this. This increasingly, hedge funds are becoming more systematic. I've just put up an article about what Goldman Sachs is saying about AI and the impact it has on junior coders. And also, let me remind you about Goldman Sachs is that Goldman Sachs is no longer a bank, it's no longer an institution, financial institution. Goldman Sachs is now a technology company because more and more of their staff are technologists, including coders. Very important to understand. So they use high speed algorithms to unearth market inefficiencies to place trades in the brief time period where their money can be made thanks to the inefficiency being discovered by other funds in the market. Systematic hedge funds operate across different market strategies. Boom. Multi strategy funds, the biggest hedge funds like Citadel, Balasini, Millennium, Schonfield, Point 72, that's Stephen Cohen's hedge fund, are multi-strategy hedge funds that pursue all of the above and more. All of the above meaning you may not know about it because they're private and secretive. Hedge funds also vary by the vast range of products they invest in. For example, credit hedge funds will invest in credit. Distressed hedge funds invest in credit where they never expect to be repaid, and emerging market hedge funds, which invest in emerging markets. Pretty basic stuff. Rise of the multi strategy hedge fund and how hedge fund jobs are now changing. To the uninitiated, hedge funds may still have a reputation for being at the edgier of financial services. These are, of course, the smaller garage type of operations, but they work under Wild West reputation, take more, and turn over the years. That's including their staff. Over the last 2 decades, they've become increasingly like banks, and the biggest drivers of this, as well as the biggest hedge funds, full on are global multi strategy funds. And they're big, big, big boys in the market and in the financial world. These top hedge funds have billions under management, much of it from the pension funds and other institutional investors that like safe, nice returns instead of risky management. Let me stop there. I am moving portfolios. I am now learning about something called hypothecation. This right here is where you put money into a bank thinking it's yours. Within your terms of service, when you agree, you may not see this, but it may lead into something called hypothecation. Meaning, when you put money into an ETF, you put money into anything that's considered a derivative, there's leverage and it becomes like a margin account, you are no longer protected. Why? because the banks will then go to these funds, these hedge funds I'm speaking of right now, that will take the risky bets using your money. You need to understand that, and you also need to understand this is happening like everywhere in the world of private equity as well. So be very, very, very careful of that and know what you're getting into. Hypothecation matters. And if you look at Interact, go do your search on Google. Interact. Oh, let me do it. I'll do it right now. So if you go to Google, you do interactive brokers hypothecation. Here's what interactive brokers says. Let me see here. Interactive hypothecation. Yeah, I got to know how to spell it properly. Okay, right here. This is important. This is when you sign up to interactive brokers, but I will give them credit where credit's due. So here's a client agreement you set up with interactive brokers, blah, 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 blah. Do what I just did and understand what you're getting into. I will give interactive brokers a lot of credit for being fully transparent, how they insure the accounts, what the maximum limits are of protection are. If you do not understand this, when you open up a trading account with a bank, you will be exposing yourself and your account and your money to lose it if there's a financial meltdown that may happen. And if you read the doom and gloom on YouTube and watch it, you'll know what I'm talking about and just be just understand that you could be on the hook for that. Okay, so going back, sorry about that, but I think that's very important that people understand. So these mavericks are the ones delivering results by competing against one another within the hedge fund. Multi-strategy funds employ pods, small teams, and pool of capital under the purview of a portfolio manager. That makes sense. The same thing probably happens at the prop shots as well. Some hedge funds are so committed to their multi-pod strategy that portfolio managers don't even know their colleagues are doing. So that everyone's kept in silos. Their goal is, as a collective, to generate as much profit as possible, regardless of where specifically it comes from. So, regardless of where it specifically comes from, could they do risky things? Could they do risky things? And it did say something about pension funds right here and other institutional investors. Be aware, you're at risk. The central structure of the fund deploys capital as it seems fit, its desired return and risk profile as former hedge fund PM, blah, blah, blah. Sheer size of the hedge fund combined with new technology, of course, could be homegrown or a third party, um, allowing financial statements to be accessible online, regulations requiring some disclosure to all investors. Oh, same disclosure. I'd even dare to say some disclosure. And compensation have eroded many of the market efficiencies that hedge funds formerly thrived upon. Whole point of multi-strategy, fundamental idea. Now we know about. I'm not gonna say he's an evil or not so evil guy, but I'll let you figure that out. But Ken Griffin had was that multiple pods following multiple strategies with money balanced across them the right way would balance out the volatility inherent both in the market and the hedge fund concept as a whole. Again, if you don't know Ken Griffin, we're talking about Citadel Securities. And I also remind you that Citadel Technologies is a separate company and a separate entity. Hedge funds had a rebellious aspect to them with an anti established mentality and certain scrappiness. We wanted to do things different, discover new investing ways, and wanted to be original and innovators, investors, explorers. It was about thinking creativity out of the box. In the industrialization, we started mutating into a big, stodgy guys ourselves. Okay, when you read that paragraph, think, let me think. 2008 financial crisis. This is what's causing the 2008 crisis. And right now in 2024, we're going to have the next blow up because of the exact same logic. And most likely with the big lobbyists in the States, in the West generally, are buying up politicians to allow this to happen. I could go on and on about different theories, different conspiracies. I don't care. They're out there. They exist. I just don't need to be sued on it. But be aware that these exist. And if you're just a general ma pa that has money in a bank, Ma and Pa with some money put into some kind of wealth management fund. Be aware of what's going on. Okay, multi-strategy funds are growing too at a time when banks are shutting. Bankers and private equity are just, well, suffering. Millennium, the world's biggest hedge fund, measured by employers, added 260 new investment staff in the last year, ending Q1 2024, 10% increase. Citadel, the second biggest, added 5%. 0.72, the third biggest, added another whopping 15%. So these operators, as I mentioned, will go out and bring on a big batch when things are great and look great. When things go bad, well, your head's now putting on a chopping block. They don't care. Your career may be done, but your job's done. And as more and more AI comes into play, as I've mentioned in my Goldman Sachs in the prior podcast and video, guess what? Most likely you may have an ended career, but doesn't mean you can't do what I do as an independent person, knowing this, what's going on, protect yourself, and at the same time, strive and thrive using a broker like Interactive Brokers. I'm not here to advertise Interactive Brokers. I'm just telling you when you do your research, I will tell you that Interactive Brokers is much, much more transparent than you'll get, and they are the largest retail uh, broker on the planet. Yeah. Supporting about 142 countries as well, something like that. So here we go. Ever increasing size of multi strategy hedge funds can be seen in how big they started debuting. Citadel pioneered multi strategy, founded in 1990. Nowadays, in 2024, you have a pioneering fund such as Bobby Jane's Jane Capital is opening with around 5 billion, 1,000 times as much capital. So here's the career paths. Now that you understand the industry, are you still willing to go in? Of course you are. You want the money. Career paths and hedge funds. If you want to work for the hedge fund, you probably envision yourself as a trader or a portfolio manager. However, investment banks, hedge funds have teams of support working in areas like compliance, technology, risk, operations. Some of the key jobs in hedge funds include, here we go, analysts and researchers. Welcome. You're at the bottom of the barrel in this level. Yeah, analysts spend their days poring over financials of company and financial products hedge funds invest in. They determine the fund's investment strategy. Guess what? I got a strategy right here that does that. Okay. We run that every day and I could do 6,000, 7,000. You can see here it's already collected 2,500, analyzes it and spits back to me what should be suggested. And I put that on my private groups. So I'm kind of doing that already. And that's the work of many, many trading desks, many, many research departments. And little old me on a laptop can do the same freaking thing and get better results. Put it up on TradingView and boom, it's all fully automated, 100%. And I got courses on that going up. I might add about 30% once I convert from my store from Canadian dollar to US dollar. That will be happening in the next few days. Over and out. Let's continue along. So now we got the traders. Now, again, a lot of these traders with AI coming can do this fully automated. And I've kind of set up my trading view to do the same. So you might think being a trader in a hedge fund is the most exciting job there is. No, well, you're wrong. Traders and hedge funds are often execution traders, simply push the button or execute trades. They don't get a chance to devise their own trading strategies. They don't get a chance to take their own positions on the market. What they do get a chance to become experts in a market timing, execution trades, watch the market closely, and know when the best time to place their trades. I can do that fully automated. As an example, well, let's check out TradingView here. Boom, boom, boom. Uh, as an example here, let me just close that out right here. This is a trading idea I've got. Okay. US oil. Okay. Right here in my trading view, I can know what's the percentage of wins I'll get on trading view. What's the profit factor on that strategy? And for this particular asset, US oil, obviously the CFD. Oh, look. Oh, we got a rising wedge. Well, that might mean we have a bear coming. Don't buy it. I could put the same thing with USD BTC. Let's see, under crypto, I'm sorry, BTC USD US, BTC USD, come on. And we will look, let's like take a look at Coinbase. Boom, 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 it's getting clobbered. Here we see a rising wedge, so maybe it might take off. And look at right here, what's the percentage of wins? 42%, 1.39. And again, all I have to do is if I want to trade on an hour, Totally different setup. Profit factor changes. The changes right here. If I want to trade only on a daily basis, look, and I know exactly just by doing 3 clicks, I know what time period I want. 4 hour for the optimal potential to make money over the last, I guess, couple of days on the 4 hour chart. But you get the idea. And you can see here, I get the calls here to long. We got a wedge. We can long, we can short, da da da. I could fully automate that and run it 24/7 and set and forget it. Truly, no coding needed. Anyways, uh, so we got here the trades. Now let's talk about the higher level we go up when it comes to traders. Now we got the portfolio managers or I'm going to show you the salaries that can be paid in US dollar in the US. Portfolio managers are the top of the hedge fund tree. They listen to what analysts say and decide how to allocate investors' money to achieve the higher returns. They are in charge of the whole investment portfolio name. Everyone wants to be a portfolio manager. Well, you got to work for it. Uh, Court case involving Blue Crest family office owned by Mike Platt, operating as a hedge fund, explained a bit more precisely to start to carry the market research to form a long term view of their investment before the rest of the market. They then construct a portfolio, seek to optimize the amount of cash that backs up the market exposure that naturally assumed by taking market position. That exposure is partly backed by cash with the balance, blah, 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 leverage, da, da, da. Well, guess what? I can do that. I can do that here. So as an example, let me see here. Let's say I want to look at value or here, right here. I have 64 market sectors I gauge by. Okay. These are the returns. So I know what are the winners. Semiconductor, momentum, dividend, and I can quantify it. Nobody else can do that. I can do it, and I'm just a little schmuck on some laptop. Check this out. So under here, I can take a look visually at something like this. This is the killer part. So I'm going to look at small cap right now. Oh, let's do the energy. And I've shown this before in one of my videos that are put on quantlabsnet.com, but I'll just do one example right here. You can see all the quantity metrics right here. This is no different than a tear sheet that a portfolio manager will give you. They give you all the quantity info, probability, Sharpe ratio, max drawdown, average drawdown, so on and so forth. So in yellow right here, that's our benchmark. That is the QQQs. Here is your strategy of the mix of the ETFs and whatnot, and it's underperforming. So do you want to put money into the sector? US energy, probably not. Now, can I do that for the whole enchilada of all 64, uh, 64, uh, 64 market sectors? Yeah, I can. Let me just find it here. Um, yeah, but generally you can do it right here. Yeah, I'm not gonna bother showing it to you, but I've got other videos showing that. But go to my group and ask for it. I'll gladly show it. All right, so there you go. That's an example. What I can do it fully automated among 64 sectors and which stock to buy, which ETF to buy, all generated by this among this right now. So it's now at 2,665 assets that's analyzing and looking at using different metrics on what to buy. And let me remind you, these are low volatile ones as well. Okay, so let's go back to that article. All right, so coming back to this. So we talked about portfolio managers are the best. Well, I can set up my own optimized portfolio just from basic Python scripting. Sales and market professionals. Hedge fund sales and marketing professionals liaise with investors. They're the top notch ones to bring in the investors. They are paid well because of this, because they are bringing in revenue into the firm. So they're very, very valuable because they have the connections and know how to do this. So they help sell the merits of the fund and persuade investors to hand over the money to be invested. Investors relation professionals fall into this. They are paid big money. Again, now many of you probably come under for this, for quants. Hedge funds employ quantitative specialists, all the more so if they're pursuing a quant strategy. These quants develop complex mathematical equations which Tell the fund to trade in order to make the most money using a particular chosen strategy. Quants who build algorithms work with quant developers, and I've gone through that with that prior um, podcast I have on YouTube. Technologies who translate the algorithm into computer software, which can implement the algorithm strategy. Next up, we have risk managers, compliance, legal, technology, and operations professionals. As the hedge fund grows, more boring than might add, which is true, they have accumulated a sort of support structure only previously seen in investment banks. Hedge funds now have risk management, compliance, and operation professionals. These jobs will be similar, except that you'll probably have to be more of a jack of all trades. It's normal for compliance and legal roles to be blended in with hedge funds. Okay, there you go. How do you get a hedge fund now? So, how long has this been recording? Only 25 minutes, but glad you're here. Now, let's get to the parts here, and I'll go over my view of this. How to find your first. Okay, so here it is. Getting into a hedge fund, not once, but twice, very, very difficult. The bar is exceptionally high. There are a few people that can meet that challenge. So if you're motivated, you're already watching this as well. The lazy people are already gone bye bye. What does it take to get a job with a multi strategy fund? Good intellectual horsepower, work ethic, training, and history of results. So again, you on your own will have to provide some form of track record to show what you're capable of doing. And it needs to be verified from, let's say, Interactive, the broker. Other things we'll be looking for under the hood are insatiable curiosity, self awareness, growth mindset, coupled with an intense desire to improve and learn and have the passion. Very important. So if you're a coder, get yourself a GitHub and create your own platform. Go out, create your own project that will demonstrate that, yeah, you want to get into these hedge funds. Sometimes it's not about holding a CFA. Sometimes it's not about holding a PhD or a master's level degree. You got to know how to brand yourself, especially now we're moving into an environment where we've got AI that can easily replace a lot of people. And it's already been demonstrated from, as I said, an article with Goldman Sachs. If you want an investment role at a top hedge fund, there is help with a record of your own performance. Even better, a spreadsheet showing what you have achieved and what you have achieved if you had been allowed to do the things you wanted to do. So again, they're talking just a spreadsheet. I think it's a lot more than that. You got to share your GitHub repository and so on and so forth. Good news for you is that the big hedge funds have more institutional. They're starting to run their own campus recruitment programs and training graduates of their own. So you got to enter into their contest to get their attention. Once you do, then you'll probably be called upon. In the past, they tended to only recruit had first trained in an investment bank sale and trading team. That's important what I just said. As with sales and trading jobs, it's hard to start off as an intern, but be warned, winning a top place on hedge fund graduate programs internship is exceptionally tough. Hedge, fire, uh, hedge funds hire a lot less people than banks. The ones I already mentioned, they probably get rid of the poor dogs that are not doing a lot. Will get thrown out. I hate to say that term, but if you can't handle this and you easily get triggered by this stuff, this industry is not going to be for you. Funds hire a large variety of people from a variety of rules, extend to hiring. They like to hire them young, okay, because they get to, dare I say, exploit them at a lower salary. Yeah, maybe. They tend to, especially, be the bigger funds with the most assets under management. Citadel, Millennium, and so on, have traditional summer internships. That's the traditional way. Rocos offer graduate programs. We have a whole list of hedge funds internships available here. Again, this is why this e-financial careers is very important. You don't need to pay people to get this at all. More interesting, however, that 0.72 and its academy, remarkably low acceptance rate of 0.6%, which is somehow less than Goldman. I'm sure they pay a lot more, but it's well-known academy for a reason. It pays interns an annualized salary between 100 to 120K. There was one financial firm, I believe it was in Chicago, was the highest paying anywhere in the world, but the highest internship paid out was like 140 grand or something. When I was at CBI, PBIB for a while, those interns were getting, was it like 60,000 for the summer? I mean, it was good money. asked for an internship for like 3, 4 months. At point 72 academy, you'll be an analyst, long short analyst. That means covering statistics, counting, economics, finance, rule modeling, finance statement analysis, and so on. M&A, corporate finance, data. Wow, it just goes on. Data, SQL, coding, operation management, and balance sheets. Eventually, once you graduate the academy, you'll get the opportunity to join one of the point 72 long short teams. Now, I don't know if it was Citadel, but in Hong Kong they had a similar contest, and it was amazing. And if you got that job, you're one of the best. You're doing pretty good. So there are now competitions now, so anybody can go in. If you want to head a job at a hedge fund specifically, you'll need to have an excellent academic record, and it has to be from a top-notch school. MIT comes to mind on that level. If you have to be an analyst or portfolio manager, you'll need to be no stranger to hard work and prove it and be driven and be innovative. The game has gotten much harder. Categories the best in hedge funds, exceptional decision making to spend hours researching the markets. You got to prove that before you even send out your resume and have it in place. Analysts and hedge funds need conviction about their investment and willing to defend when other analysts or portfolio managers question their validity. Let me rephrase that. Rip apart your trading idea and make you feel like a piece of meat or what. As I said, if you can't handle it, and get triggered by this, this ain't for you. Big egos are in this industry. Continuing along, most hedge funds, like people with mathematical and data skills, is not aren't enough on their own. Widespread misconception about the hedge fund professional is either that you must be either a Mac geek or sleazy deal maker to succeed. Personally, I think it's both. And you have no soul, and you're willing to sell your mom's house paint for money. You have to be a successful portfolio manager or analyst about being able to communicate complex investment ideas, innovative thinking, generating new ideas, and have flashes of intuition that can join up the dots. And this has to be on a split second decision, not like, oh, I'll go take a nap and I'll sleep overnight and come back with a decision. They want it now. In 2 seconds, they'll give you 2 seconds. Uh, so Citadel says it has candidates with sound judgment, good communication skills, and whatever it takes attitude. No whining in this kind of roles. Two Sigma says it wants people who are creative and have intellectually curious minds. We've covered that. How much more is this? Okay, we're going to soon get into these salaries. Here we go. All right, education qualifications for hedge fund rules. That being said, what education can help you to get a job in a hedge fund? There's a similar pattern of back bank sales trading teams look for, unsurprisingly, one analyst with new analysts at Citadel and Millennium, two of the biggest hedge funds in the world, show that hard sciences, especially math and no physics, it's physics over math. I mentioned that in another podcast earlier. Very much preferred over anything else, although there were a handful of traditional financial service graduates scattered throughout. MBA might have your chances, might help your chances, particularly if you want a non-investment role. 2023, 6% of Harvard MBAs went into a hedge fund or asset management. A master in financial engineering will also be helpful, with latter particularly helpful for quant funds. At the top, hedge funds, which use systematic investment processes, quantitative PhDs are popular. There you go, PhD. As funds make energy investments or based weather predictions that may help to have studied meteorology or poetry. Okay, I don't know. There's a link that I'm not going to ask. It's like the moon and what color the moon is, and okay, whatever. Aside from hard numbers degree or several, it might be worth quantitative hedge funds to angle for. This is the only one out there that I see that's useful. Not from the one from India, sorry. Not the one from the Messiah that you find on YouTube, sorry, and so forth. They all, yeah, all. If you're doing it for independent learning, be my guest, but you'll probably still be disappointed in it. But that's the one right there that looks to be the one to get. So, aside from directly applicable knowledge, also access to a well known and well connected alumni network. Agreed. It's worth pointing out that hedge funds recruit frequently from investment bank sales and training programs. They call it poaching. No need to sit FINRA 7 exams. Will a CFA help? I think, I hate to tell you, alphabet soup on your business card. Yeah, it'll help, but it's not like, well, it'll just help. Hey, everybody's wanting to know what the salaries and bonuses and hedge funds are. Here we go. Amount in a hedge fund will depend upon things you are doing, size of the fund you're working for, measured by, and you always hear this AUM, assets under management, and the fund's performance or the performance of your unit within the fund. Here we go. There they are. Hedge funds pay out a higher percentage of profit generated called P&L bonus to its staff and bank sales and trading teams. That means top portfolio managers can earn insane amount of money. One single team at Citadel, made of just 20 people, split a colossal 600 million bonus pot between them. Oh, we can see why Ken Griffin's buying the most expensive real estate in London and in New York multiple times over, and now in Miami. And so now you see why. Nothing more to say about that guy at Citadel, Ken Griffin, the founder. Our 2024 salary and bonus survey was realistic. Hedge funds pay their staff in a range of 320 to 400K in their 20s. Oh, times are different. Okay, really big numbers, seven figures, or only start with serious packages over the age of 50. This is where I come in, but there's no way I'm going to be part of this. Sorry, I just don't have a PhD. Okay, so if you're in the age of 20 to 25, average salary 138, average bonus 185, total comp 324. If you're between 26 and 30, 163 to 2 plus 248 for the bonus, 411. Now we talking 36 to 40. Most people will be out of here by this age. Base or average salary of the base 214 plus 229 at 443, right? So now you're 41 to 45, 269 for the base. Average bonus 342, 611. So most people can't hack it, have a heart attack, or just jump off a bridge from the stress, are not going to make it past probably 35, and they'll be right out of the industry. But if they keep going and can hack it, as I said, you start to move up 46 to 50, 282 base, 153 bonus, 435. So funny enough, as you get older, your salary goes down compared to where you were 5 years ago at 611. But this is the big boy stuff now. 50 plus, 510 base, another average bonus of 510. Note it's pretty well 100% of the base. 1,021,000. Nice. That's in 1 year. Pretty good. If you can survive that and have no heart attack, no anxiety problems, jumping off of bridges, not happening, you getting that, you're doing all right. So let's see what some of the comments of. He categorizes the best people in hedge funds as exceptional decision makers. There's two comments here. Where's the second one? Blah, 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 blah. No, there's no second one. Probably spam. Anyways, that's pretty useful. Again, if you want to know more about what I do, come over to quantlabsnet.com, click on this learn, and you'll get what I liked, trading view and all that. I've already talked about it. Over and out. Thanks for watching.